I'm Matt. I'm heading up the panel here with three great guests. Maybe let's go down the line. Just give brief introduction, on yourself, your background, what you're focused on right now, and then I'll kind of set the stage for the panel. But this is going to be exploring really the evolution of our market structure, how we've evolved over the last 10 years and where we're going. And these three people are great folks to help kind of guide that dialogue. But if you want to just introduce yourselves, name, the firm that you're at, and what your focus is on right now.
Thanks, Matt. I'm Chase. I'm the CEO of Susquehanna Crypto. We are an independent crypto prop trading arm affiliated with Susquehanna. We market make for the full gamut of digital asset products: spot, derivatives, OTC, token market making, DeFi, venture. Before Susquehanna, I actually have a legal background, so I was at a few firms in New York. I think that's been sort of really helpful for me in the new role, just at this pivotal point of regulation impacting these markets. And what I'm focused on right now mostly is sort of convergence, how traditional finance and crypto are, the line between them is getting blurred, and how we can best position ourselves to, take advantage of that.
Cool. Julian?
Yeah, Julian Fahrer. I'm the founder of Bitcoin Laws, which tracks digital asset legislation across the United States at state and federal levels. Prior to that, I've been a founder of a couple of different software companies in tech in the Bay Area over about a decade. Worked in venture capital for a little while. I built a previous Bitcoin company, and also a former lawyer. So my kind of convergence of interests is on the kind of policy crypto side.
And I'm Ben Reynolds. I'm the SVP of business banking at SoFi. Business banking is a new line of business at SoFi. We're probably best known for our 15 million retail members, but we're building in this space. Prior to this, I was at Silvergate Bank in 2016, or since 2016, and was the president there. I'm not a lawyer.
Thank you guys very much. So just to set the stage and step back a little bit, when you think about the evolving kind of financial infrastructure. So I joined the space right around the same time as Ben. We actually know each other from way back, but back in 2017. And I came from a large global macro hedge fund, Bridgewater Associates, $160 billion in assets. We interacted with some of the world's largest pools of capital: sovereign wealth funds, corporates, pensions, endowments. And at the time, it was a huge leap of faith coming into a very, very nascent market in 2017. So I just want to read some stats and kind of almost orient you with where the market was at the time that I joined, and then we can talk about today where it is and where it's going. But in 2017, Bitcoin was trading at about $3,000. ETH was trading in the hundreds. There were two banks in the space. That's it. There was Silvergate Bank, which was led by Ben, basically. And there was Metropolitan Bank. And Signature Bank ultimately came in kind of right after. And none of those banks exist in the space today. They're all gone. Bitcoin was not taken seriously as an asset. Washington did not even give it the time of day. There was no clarity. There was no framework. There was no regulation. It was truly the Wild West. Bitcoin OTC markets on the trading side, we were quoting about 1% to 2% spreads on $1 million order in Bitcoin. Today, that's probably 2 to 5 basis points. So talk about efficiency and the maturation of a space. I think like that shows you where we were and where we are today. USDC did not even exist yet when I was in the space in 2017. USDT did, actually, and that was, I think, back in 2014. The biggest exchanges at the time was an exchange called GDAX, which is now Coinbase. BitMEX and Bitstamp were the three major exchanges in 2017. But there was an up-and-coming exchange that was starting to form overseas, went by the name of Binance. There was no such thing as qualified custody. Settlements were mainly done from hot wallet to hot wallet, or exchange to exchange, or self-custodied on a ledger, or a Trezor, for those that are familiar. And Bitcoin was really for the believers only. It was this very, very small market, but a small, very incredibly smart, hardworking group of people helped kind of shape and set the stage for where we are today, almost 10 years later. So I'm not going to tell you now where we are today. I'm going to let these guys do that. But that just kind of gives you the perspective of how far we've actually come over the last 9 years. And it is pretty amazing to see. Like I was at one of these conferences back in 2017 at like Consensus in New York City, and man, what a different world we are today. I think everyone's thesis has played out, believe it or not. And there's obviously, people are constantly looking at price, and there's bear theses, there's bull theses, but like to see the actual maturation of the market is, from the front line, it's something that we all kind of have in common. It's been pretty amazing to watch. So Ben, why don't we let's start with the kind of banking and settlement layer of the space. You've been super close to the evolution of that from your time at Silvergate. Ben actually was at BitGo for a while. We worked together, and he helped kind of pioneer our stablecoin effort. So you've been super close to what banking is in crypto, the kind of intersection between banking and stablecoins, what it means to build a network. Like, how does a network actually drive adoption? Why don't you give us, your sense of what the landscape looks like today, how important that network effect is, and then what you're doing really at SoFi from a banking perspective today.
Yeah, so I think it's a really exciting time, and what's notable is how much it's shifted in just the last couple of years. So Silvergate ultimately wound down in 2023. Signature about the same time, SVB, and at that time, it was like everyone was sort of underbanked, right? Like it was, if you could find a bank that was willing to do business with you, like that was an accomplishment in and of itself. Now, just 2 years later, really, like there's a bunch of banks that are coming into the space. SoFi is one of them. So I think things are getting better on that angle. There's sort of two parts of SoFi. So I mentioned earlier, like we're really focused on our members and helping them get their money right. So we just, at the end of last year, relaunched crypto buy, sell, and hold to our members, the 15 million of them. And so to do that, to your point on infrastructure, you have to figure out like, okay, well, how are we going to solve things like custody? And are we going to allow our members to stake their assets? And what does that look like? And so I think one of the biggest things is that you can get to market. We were able to get to market quickly because we did that using infrastructure partners like BitGo. So we're a BitGo shop. We use BitGo for custody. We have some other providers that we use as well. But just that ability to, go out there, get good infrastructure. BitGo's been around since I think 2013, and be able to do that and launch a product quickly is really pretty incredible. So we're, that's sort of the retail side of things. On the banking side of things, we're launching a real-time send network, the ability to move dollars 24 hours a day, 7 days a week, over an API between counterparties or commercial clients of SoFi. So we're pretty excited about that. There's really one bank out there that does that today. And so
Which bank
that's
is that?
Customers Bank. So Customers Bank is the one that's out there today. They've done a good job. I mean, thank God for Customers Bank when, Silvergate and Signature were going down, right? I mean, I can't imagine what the industry would have looked like if something had happened to them as well. So kudos to those guys. But we think that, as we're out talking with prospective clients, like they want a bank with a bigger balance sheet. They want, other options. And so I think there's still more room to do in that area. Maybe the last thing I'll say on this topic is, it's not, when we first launched our real-time payment network in 2016, like stablecoins weren't really a thing. There was Tether, but people weren't really using them the way they are today. And so what's interesting is even though there's so much more volume in stablecoins, people still have the need to go between fiat dollars in a bank account and stablecoins on the blockchain. And there's not a lot of good options or ways to do that today.
Yeah, and on that point, I mean, that's something that we see a lot. So I spearhead the trading desk at BitGo, and we're constantly moving dollars in and out of fiat to USDC to USDT, and now there's different chains that these can settle on, whether it's Solana or ETH or or Tron or others. And to Ben's point, like even today, there's not that many great solutions for stablecoin to fiat on off ramping, to the point where a lot of our clients are just trading that flow with us daily. Like we're the intermediary. Our OTC trading desk at BitGo happens to be the intermediary for billions of dollars of stablecoin to fiat flows. So that's going to be something that I think like we'll see the integration of like native ability to go back and forth in between. And then there's the whole concept of yield bearing stablecoins, which we could get into shortly. But Chase, from your perspective, so Susquehanna obviously sits at the intersection of traditional markets, crypto markets, prediction markets. We'll talk about the trading market structure in a little bit, but from like how you guys have had to change your business over time to kind of stay up with what the demand is from your clientele or from your counterparties. I would imagine it's a huge operational lift that the firm had to kind of go through. Can you talk a little bit about like what that process has been like, how you're thinking about scaling it further? Like, how do you actually play in all these markets, and what was the operational lift to get you guys able to do that?
A lot of patience, creativity, waiting for regulation to catch up. We're in a unique position, right? Like, we're a crypto native firm. We're not Susquehanna, we're Susquehanna Crypto. At the same time, we have that heritage of traditional finance, and we can price all the same assets, and we have the balance sheet and the resources. So I actually think we're in a pretty good spot to sort of be at the forefront of this convergence, right? But as far as operational lift and everything, intermediaries like BitGo, like others, have been helpful, right? They didn't exist in the fashion they do now years ago, and you couldn't neatly operate across these verticals. But I mean, take our prediction markets, for example, our partnership with you. You can bring institutional size scale to those markets just by function of you guys as an intermediary with end clients and using stablecoins.
Yeah, and just to shine a light on that a little bit more, so we've launched the ability for our institutional clients to trade prediction markets through BitGo directly, using crypto as a collateral asset. So rather than having to send fiat or stablecoin into Kalshi or Polymarket directly and have to deal with kind of the exchange and the platform and pre-funding, the same reason why institutions trade like OTC with us today for spot or for options is just because it's a lot easier to deal with one broker across all those platforms, and to be able to utilize the assets that you're holding at BitGo as collateral rather than pre-funding more working capital out of your pocket. So we've partnered with Susquehanna really as our liquidity provider to those markets. They have the expertise trading them. We have the expertise kind of bringing institutional capital via crypto to that market, and so it's a good kind of intersection between the two worlds, and it's been fun building that out. Julian, maybe you can shed some light on now that the Genius Act has passed, the Clarity Act sitting in the Senate. How do you think kind of these regulatory proposals are going to impact market structure today? What are you seeing in DC that's relevant in terms of providing more guidance for the facilitation of liquidity in the market structure, from your perspective?
Yeah, so I think there are a few really important ways that Genius and Clarity improve on the status quo that crypto market structure has today. I mean, a few of them that if Clarity passes, that would obviously make a big difference would be establishing clear territorial boundaries between the SEC and CFTC, helping to provide registration pathways for tokens and securities and all these great things. So there's so much that these bills do and will do. I think one of the really big live issues still is with the specifics of the implementation. So when we think about Genius, I think people are probably familiar with this idea that the Genius Act has this prohibition on stablecoin issuers offering yield to stablecoin holders. But then in practice, when it comes down to making the rules for how this works, like what the OCC are doing right now, how far does that extend? Does it extend also to third parties that work with stablecoin issuers? Does it prohibit rewards programs and discounts and all these types of things? So I think this is where kind of the nitty-gritty of actually getting these bills working in practice is still a live issue.
Yeah, that makes sense. It's like the devil's always in the details of these things. It's never as black and white as it may seem. On the stablecoin topic and on the yield-bearing stablecoin topics, this is really an open question for the panel, whoever wants to take it. Like, how do you see this playing out? Like, are we going to see the major stablecoins ultimately be yield-bearing stablecoins? If so, like, when's that really going to happen? Obviously, there are yield-bearing stablecoins out there, whether it's through Ondo or Securitize or Athena, that's more DeFi and ETH native yield. How do you see the yield-bearing stablecoins kind of evolution, and like how long is it actually going to take to manifest where like I'm not trading in USDC and USDT all the time, but I'm trading in a yield-bearing stablecoin?
I can start. So I think what's really interesting in this area is what banks end up doing with stablecoins. So SoFi at the end of last year launched its own stablecoin, SoFi USD or SoFID, and it actually has the properties of both a stablecoin and a tokenized deposit. So, and I'll come back to that in a minute. But what's interesting about the banks coming into the space is that generally, tokenized deposits, especially like at a Bitcoin conference, are kind of like, like some CeFi thing that doesn't really do anything. But what's interesting is you have folks like Bank of America who've been talking about it potentially issuing a tokenized deposit, and they have built-in network effects, right? If you think about it, they've got, I think it's 60 million retail customers and millions of merchants that use their platform. So their distribution is already there. And that's the most difficult thing about launching a stablecoin, is achieving distribution, right? And so the question though is this just some lame token that sits within the four walls of a bank, or can it actually go out into the wild? And if it can actually go out into the wild and earn interest from a bank, then that's pretty interesting. So we're working through this concept of, when it's on platform, we'll issue it on, a distributed blockchain, Ethereum, Solana. It's on Ethereum today. And when it's within the walls at SoFi, it has the characteristics of a tokenized deposit. But then as soon as you take it off platform, it kind of turns into a stablecoin, one token, one smart contract. So that's pretty interesting in terms of, as you think about like the ability to earn yield on these stablecoins. But I think it's early days, and again, like the really interesting point is, like, what if these banks that have tens of millions of users start issuing stablecoins and have those built-in network effects, and then how does that change the ecosystem as a whole?
As a follow-up to that, like, and maybe Julian, you want to take this, or whoever, but like, do you think it's going to be a world where there are dozens and dozens of yield-bearing stablecoin issuers, or is there going to be some sort of consolidation at some point where there's one or two or three that ultimately dominate, kind of the way that we saw with just regular stablecoins and USDC and USDT? Like, how do you see the fragmentation possibility or not on that topic?
Yeah, so I don't know if I'm necessarily best placed to answer some of this, but I think there's a natural diversity of, fiat currency denominated stablecoins that you can imagine will exist going forward. Different nation states have obviously their own state-backed currencies, and it's like you can imagine there's going to be a proliferation to some degree there. I think it's, on the other hand, probably a convergence when it comes to US dollar denominated stablecoins. It's hard to imagine in the long run how a great degree of differentiation can persist. But
So I think there's going to be dozens and dozens of stablecoins, and I think and I like to talk about them as like just dollars on blockchains, euros on blockchains, yen on blockchain, pesos on blockchain, and then when you have all of those fiat currencies on blockchain, like the ability to go between the two on chain, it just sort of happens. So I think there is going to be I think there's going to be massive disruption to like the way FX markets work today and those types of things as you get more tokens. I think what'll happen though is they'll fade into the background, right? We all have digital wallets. We'll have digital wallets on our phone. They'll have dollars and euros and yen in them. And those might be stable coins, but you don't even necessarily realize that they're stable coins. It's just sort of an operating layer kind of behind the scenes, and reduces friction in terms of how money moves.
Yeah, it's an interesting point. I mean, so at BitGo, I think we originally had, the idea, I mean, we're moving towards launching a BitGo specific yield-bearing stablecoin. Ben was actually spearheading that for a while. But we kind of saw the way that the market was unfolding, and we changed our view in that we said, we actually think there's going to be a lot of companies that want to launch their own stablecoins. And so rather than trying to just compete with everybody, what if we became great at being the platform to help facilitate those companies create their own stablecoins? So we launched what was stablecoin as a service at BitGo, which then kind of migrated into more crypto as a service holistically. So we kind of packaged it all up and said, we don't want to compete directly, but let's at least help facilitate those that want to do this, and we can monetize it that way. So I share the same view. I think, there will be many issuers, but I do think over time there will be consolidation, as there typically is in these kinds of markets. Let's shift gears a little bit to the kind of trading capital markets side of things. A lot of exciting things happening on this front. It seems like more and more, the world just wants to speculate, and crypto is the world's greatest casino. I will say that. And so what that brings is just a natural, usually bid for an asset, such that the institutional participants like Susquehanna and BitGo, we can make markets around that. We just want to see the volumes trade, and we'll provide liquidity to really any of these markets through a multitude of different rails. But Chase, why don't you start? Like you mentioned this earlier. What I'm starting to see is what used to be crypto, and then TradFi, and then sports betting. 3 different worlds, 3 different platforms, predictions, is now really it's one demand spigot. Like people want all of those things, and so you see platforms like Robinhood, right? That were once traditional equities wanting to offer prediction markets and crypto. You have crypto exchanges wanting to offer prediction markets and traditional equities, and you have traditional equities platforms looking to offer, or you have prediction markets, platforms like Call Sheet and Polymarket looking to offer perps, which is a natural crypto native product. So what that signals to me is like there's this convergence of speculation demand, which should be great for a platform like Susquehanna Crypto. How do you guys see that kind of playing out? How do you want it to play out? And how do you kind of like anticipate that to set yourselves up to for the greatest path of monetization and value creation?
Yeah, I mean, on the surface, it might seem messy and everyone is doing everything, but I think to your point, it's pretty logical and like an unsurprising outcome, right? Like all those markets and things were siloed for a long time, not because there wasn't demand, but just because the regulation wasn't there and the infrastructure wasn't there, right? And at their core, they all share the same value of these are things where people want to express their opinion and price risk. And so as regulation catches up, as this convergence continues, it just makes a lot of sense, right? And you can stop thinking about it as like traditional finance versus digital asset finance. It's just finance.
Yeah. And you guys?
Yeah, I mean, so we don't do any institutional trading today. Like really, we're about enabling, buy, sell, and hold crypto for our 15 million retail members. So we're not doing anything on the institutional side today. But I think what's interesting as we think about opportunities in the space is lending, right? And there's a bunch of like on-chain finance and lending protocols and whatnot that exist today. But in some way, like depending on what your risk tolerance is to those, we've seen, some less than favorable activity on some of those protocols over the last couple of weeks. And so I think, if you think about a bank has balance sheet, they take in deposits and they make loans. And so I think that's a natural place where more banks will get involved using all types of assets and contracts as collateral, to be able to make those loans. And then that just, increases liquidity and ultimately makes it more efficient to do trading and all types of other activities. So I think it's our offering today at SoFi is pretty basic, but I think that we're definitely looking at what are the other opportunities that are out there in this way.
Yeah. On that note, I mean, we've obviously seen the emergence of some of these decentralized platforms, whether it be for trading or lending. So there's Aave, right, which unfortunately had a recent credit issue, obviously with Layer 0, and then we had Drift, which is another hack that happened maybe a month ago, lost $250 million because of a bad actor. We have Hyperliquid, which is an incredible decentralized trading platform for speculation, for hedging, and it's been incredible to see the adoption there, even despite still like pretty significant infrastructure barriers and regulatory clarity on it. I wonder, Julian, like, are there any developing regulations or policy around these decentralized venues? Like, what does that outlook look like? I would imagine there's going to be a lot of scrutiny just because of the amount of money that's flowing out of them. It seems like by the month now. Like, how should we think about that from like how are these things going to be governed if they will be perspective?
Yeah, so I think to some degree they already are governed, right? Yeah. So whether it's look at these hacks, like to the degree that there are consumer protection issues or like law enforcement issues, frameworks already exist to deal with them. I think my concern, or at least my feeling that there might be kind of a live unsolved issue here is particularly with the decentralized protocols. If we look at the Clarity Act, I think one of the issues that has maybe stalled progress a little bit has been consideration of language in what was the Blockchain Regulatory Certainty Act now part of clarity around developer protections for developers of open source protocols. The idea being that if you build a protocol and you don't custody the funds, you're not going to be responsible for how it's used, or at least you're going to be exempt from money transmitter regulation. So this, I think it's reading between the lines. Even over the past few days, there's been some back and forth. I think Senator Tom Tillis said, he didn't name this in particular, but it was kind of imputed when he raised issues about law enforcement concerns that this section of clarity may have been a bit of a sticking point. So I think the regulatory frameworks exist, but there may, my concern would be that this carve out maybe gets a bit of undue attention because of that.
That makes sense. Yeah, I guess another point on just the DeFi platforms generally and their intersection with like institutional markets. So like for Susquehanna, for example, or for Susquehanna crypto, like how do you guys envision playing between DeFi, rails and DeFi exchanges and like institutional capital that wants to be put to work? Like, are you guys actively trading on decentralized exchanges? Are you not there yet? Like, what's your take just on trading on decentralized exchanges and what's the strategy there? Like, how do you bridge the two worlds basically?
Yeah, I mean, we're active on DEXs. I think it's still early days there, but volumes have been increasing, and with macro events, people have been wanting to trade perps on oil and Qs and equity perps. So that demand is there, and that industry still needs to grow. And if some of it is going to need to be the regulation you're talking about catching up, but we are active there. And as far as what bridging, what was the second part of your question, Matt?
Like how do you see like the intersection between traditional markets or like institutional OTC markets and DeFi? Like, is it going to be, an event where we see trading from centralized exchanges like Binance, Coinbase, wherever, ultimately all come on chain to DEXs? Do we think that we're going to have like these two worlds operating independently for a while? Like, how do you think about the interwovenness there or not?
Yeah, I mean, it's tough to say, right? I mean, a lot of it's going to depend on clarity and other rulemakings that come shortly after that. I think there is obviously a need for both sexes and DEXs, right? They're serving different purposes right now, with different market participants. But yeah, to your point, it's you're seeing the same products traded there on non-KYC DEXs that you would see in traditional markets. And I think, the firms that are best positioned to sort of operate across all of those venues at the same time are going to be the ones that succeed.
One of the things that we debate a bunch at SoFi is just sort of, do we want to enable DeFi for our members, right? So, you have, our mission is to help our members get their money right. Do we want to enable them to take funds off of our platform and put them in a borrow lend protocol where they might be able to, like on the upside, you might be able to earn 10%, right? But then you might, on the downside, there might be a hack or there might be something else. And so I think it'll be like one of the things we're watching is it'll be really interesting to see how retail activity continues to push into DeFi, or if it does, and like, does it end up breaking out from being like sort of like a degen thing today?
Yeah.
And then you've got the institutions like layered in there, right? Because I would imagine that it gets a lot more interesting for Susquehanna if there is more retail flow into those protocols.
Yeah, I mean, we talk about things like vault curation all the time. The reality is right now with all the recent exploits and where yields are, it's a tough sell, right? Like the hacks themselves, it wasn't because there was an overly risky strategy or, something blew up. These were OPSEC issues, and it could have been T-bills, right? So like, it's a tough sell to say, oh, we'll get, 1 over the risk-free rate and just subject ourselves to this kind of existential risk. So we'll have to see where it shakes out, but it's tough right now.
Yeah, it's a good point. I mean, even for BitGo and our, prime brokerage or trading business, we're constantly asking ourselves that same question that you mentioned, Ben, which is like, do we want to allow our, high net worth users or, family office clients, the rail to go into DeFi directly and just like access the protocols through BitGo's wallet structure? Like, or would we rather sit as kind of the institutional layer between those that have capital but might not want to play in the crypto native game? And we would basically take that capital, pay them some sort of fixed yield on it, and then we would go and actually deploy that capital in DeFi, having the expertise. And I don't know the answer. I think it's still being fleshed out. Like, what's the most what's the right way to play in that space. But I think my perspective is that there needs to still be, a lot of the kinks worked out in the infrastructure, as we've obviously seen before. Like, there is mass adoption and comfort level with utilizing the technology. And so for now, we're kind of stuck playing the institutional layer between the two. And I'm not really complaining, because there's a lot of value in that, right? Anytime that you can kind of get yourself, in the middle of a market is kind of where you want to be from a profitability perspective, but it's ultimately not the most efficient to the end user. And so at some point, when the infrastructure and when the kind of bones are better equipped, we'll have to then kind of navigate out of that intermediate layer and let the market just get disintermediated. But I don't think we're quite there yet.
Yeah. I think it's the question that TradFi firms are asking is, are we losing our retail customers to crypto or to DeFi? Right. So when you look at someone like Coinbase, who enabled Morpho on their platform, so that if you're a Coinbase retail customer, you can go between your funds on Coinbase and now put them into Morpho or whatnot. Like, is that enough of a value proposition to be able to keep those clients? And how does that compare to the risk as we've been talking about it? So I think that's where the question's coming from, because if you're sitting in the audience, you might be wondering, well, why would a bank, in light of what's happened on Aave and whatnot over the last couple of weeks, why would you ever enable that? And sort of one answer is well, other more crypto native firms are enabling that. And so are we losing to the crypto firms? And do we need to do this in order to be competitive? I think so far the answer is no, but that could change.
Yeah, that's a fair point. Shifting gears a little bit to just broadly thinking about the future, like the next 1 to 3 years in the market. We've kind of covered what history looked like back in 2017. We're covering a lot of the things that are taking place and some of the problems that still exist in the infrastructure today. But if you look ahead, let's say to the next 1 to 3 years, which I think is the right timetable for crypto. I think anything further out is almost hard to fathom because of how fast the space moves and levels up. But I think the 12 to 36 month range is the right range to focus on when you're building out your business or thinking about new ideas. So maybe we just go around the panel here. How do you see the next 1 to 3 years playing out in, from a kind of just the evolution of the market? Any key theses you guys have? How do you see things evolving from here? What are going to be the things that people are talking about, on the stage 2 years from now, or 1 year from now that we're not today?
I can start. Yeah, I mean, it's the same thing we've been talking about, but I think you'll continue to see this convergence, right? Where, the DCMs will offer both crypto products, prediction markets, everything, right? Equity perps. And conversely, traditional, crypto platforms will offer predictions and other things. And, it sounds easy enough to just say, oh yeah, we can operate across all of these venues, but it's actually really hard, especially below the surface. And, again, part of it will depend on how the regulation shakes out. But I think, you're the firms that can really nail down how those pipes work and, for their counterparties and clients, make that experience seamless. I think, we'll be in a really good position. That trend is going to continue.
Yeah, so I think the state of things in 2030, I think, will depend a lot on what happens in 2028, frankly. At a political level, we're fortunate to have an administration right now that's very supportive and pro-crypto in many ways, but no victory in politics is ever permanent, right? And so the pendulum may swing and things may change, and even with the enshrinement of Genius and hopefully Clarity too, you never know. So I think things aren't set in stone in that regard.
Yeah, on that front, before you jump in, Ben, on the political side, let's say we revert back to the previous administration, and the same psychology kind of gets applied that was right back 4 years ago or a few years ago. Do you think there will be an undoing of all the progress that we've made in the last call it couple of years, or do you think the psychology of that administration will kind of just absorb to the new status quo?
Well, look, Genius is not going to be repealed,
Yeah.
And Clarity, should it pass, won't be either. So there are some gains that won't be reversed. But of course, the devil is always in the detail and kind of informal enforcement, rulemaking, and these kinds of things. Developer protections, as I mentioned earlier, there's such a broad battleground, really, that there's so many issues at play that, a meaningful reversion or a pendulum swinging back could certainly stall progress, if not reverse it.
Yeah, I'd be surprised. And that's my personal view, but I think certainly regulation may not move as quickly as it is now, or people want it to move now. But a lot of these things have bipartisan support. I don't think that like it's totally black and white. And even if there's an administration change, I would personally be surprised if they just undo everything and walk us back for 4 years.
I would add, I think there's market forces that make that difficult as well. So for instance, like when you look at like USDC and Tether, like you can't put that genie like back in the bottle, right? Like those, they're distributed, they're not going anywhere. And so if you do go into a position where, there's more stringent regulation on those things, then you just push those projects offshore, right? And then you potentially lose, you lose innovation. You also lose potentially control of the dollar and the treasury markets and those types of things. And so I think there's market forces that also kind of outweigh like whatever an administration shift might happen.
Yeah, that makes sense. Almost the flip side of this question. So something that I've found is very, very difficult about being in crypto for the last 9 years is there's so much going on and there's so much bullshit that's actually happening in addition to all the good stuff. So like to be able to find the signal amongst the noise has proven, I think, pretty challenging. How do you guys like think about that? Meaning when you look around the space of what's happening right now, all these things are evolving, right? There's digital asset treasury companies, there's DeFi, there's prediction markets, there's stable coins. Like what are you calling bullshit on? Like what's the thing that you're shorting to the ground because you think it is kind of a fugaz and won't actually take off or transpire in the way that the believers think? So, it could be an idea, it could be an asset, it could be a philosophy. Like what's something that you guys are bearish on that you do not think will transpire over the next, call it 1 to 2 years?
Yeah, I don't know if I'd say bearish. I think I'm a big believer in tokenization, and I think it's going to be a big part of the future of finance. But I think right now what you're seeing is this rush to tokenize things just for the sake of tokenizing them. And I don't really think that's productive. I think there needs to be more thought put into like, okay, if we tokenize this, what value are we providing and why are we doing it? Otherwise, that whole movement might get off tracks.
Yeah, that's a very fair point. I think there's folks out there that have said something like bringing assets that are already liquid on chain makes a lot of sense because you're basically just giving assets that are highly liquid a new means to be distributed and used in a new market. But bringing assets that are illiquid on chain just to tokenize them, like private credit, for example, is it really solving any problem, or is it just like a new way of wrapping the same thing? So I agree with that. How about you guys?
Yes, I think one of the hardest recurring problems in crypto seems to be building for the world that you think is going to be around at some point in the future versus solving actual problems that users and customers have today. And so something that I think maybe straddles the line there a little bit that's getting a bit of play at the moment is something like agent-to-agent payments, which I'm excited about it. I think it could be really important in the future. But to me today, it seems more like something that works really well as a part of a fundraising story rather than solving problems that really exist today. So yeah, I wouldn't say I'm shorting it, but I don't think it's maybe a little bit overhyped, I'd say.
It's funny. I used to like back in the early days when people would ask me about like what is Ethereum and like what's the purpose, I would always use the like agent to agent or car to car like transmission of money in a decentralized fashion as like the potential use case. But being in the space and seeing it is, it makes me less confident that that's going to ever happen. So fair point. And what about you, Ben?
Yeah, I mean,
Calling bullshit on.
So maybe I won't. I mean, I think some of those things that have like if ICOs were ever to like come back into favor, like a bunch of the NFT and like meme coin things, like these things from time to time kind of tend to pop up again, and most of those just aren't durable. So it's more for me as I'm evaluating the landscape. It's more about like kind of looking for what are the things that are like durable and required in order for it to be successful, and does it have those things, right? So things like, does it like, does the idea need balance sheet? And if it needs balance sheet, do you have balance sheet? Like, does the idea need distribution? And if you need distribution, like, how are you going to get distribution? Like what are those things looking for? And there's a lot of, kind of one thing I love about the space is there's always like fresh ideas of different things. But as like once you get under the hood of those, you find out like, oh, this actually isn't a fresh idea. This is just like a rewrap
Yeah.
of that other idea.
Totally.
Those types of things.
Yeah, that makes a lot of sense. In our last, few minutes here, let's maybe give just closing thoughts, but also like in a way that illuminates something that you're super excited about. So like maybe like if you weren't in your current roles today, and you didn't have day jobs, like where would your focus be in the space? Like what would be the one thing you'd want to go work on right now? And it could be across markets. It doesn't even necessarily have to be crypto, but like when you're looking at just markets generally or tech or innovation, like where would you want to spend your time? And maybe it is exactly what you're doing right now, and that's fine. But what's another thing that you find super interesting?
Go ahead.
Yeah, I think, I'm really excited about prediction markets. I might be biased, but I really think we're in the first inning of this thing. And, there's real volumes on the platforms, but I think in the future, there already are real world business hedging cases on there. And I think that's only going to explode as more institutional capital goes on there. And, I think you look at some of the valuations of these things and people might be skeptical, but I think that bakes in this vision of where they could go and where I think they're going.
100%.
Yeah, so I don't know that I necessarily want to spend time on this myself, but something that really fascinates me and I'd love to learn more about is this kind of emerging national security story, particularly around Bitcoin and this kind of increasing recognition that Bitcoin mining is kind of an important sector and asset class and so on as far as the security of the United States is concerned. I think what interests me about that is what's next beyond this kind of rhetoric, supply chains for chips that go into Bitcoin mining and these kinds of things, which if these truly are like national security issues, what is the government going to do about it?
Yeah, maybe it's not a direct answer to the question, but you can't have a panel without mentioning AI.
Yeah.
I mean, it's super interesting from the standpoint of it used to be like the long pole in the tent was the time that it took to build something, right, from a product perspective. And now you can just iterate so quickly and build so quickly. It's interesting because people have this fear that like, oh, like AI is going to replace your job and those types of things. Like the people that I know that are using AI the most are probably working more than anyone else I know. And so I think that that's really interesting from the standpoint of, how do you build product differently? And then also like in a world where you can build product faster, like what are the durable moats that are out there, right? And it's around relationships, distribution, like balance sheet, all of those different things. And so thinking about like how those things come together in a world where that also has like prediction markets and sports betting and all of those things, like, I don't know. I don't have any great ideas, but I probably would, look to cook something up at the intersection of those things.
I couldn't agree more. I mean, I think like there used to be the saying where it's like ideas are cheap and like executions like where it's really like difficult and expensive. And now executions become so much easier so fast. And so it's really about, to Ben's point, like what are the things that hold value? If it's not just the idea itself, if it's not really the execution, it's really the relationship. It's your ability to put those two things together, get buy-in, raise capital, and then get clients. And that is really, it's a human thing, which is relationships. So all of the non-human elements that people used to spend time perfecting, we don't have to do that anymore. And so it's like almost going back to your roots. Like as a human being, how can I be the most present in what I'm doing and get the right buy-in from other human beings? And then that's the moat, because everything else kind of falls into place with AI.
Yeah, I couldn't agree more. And like it's super exciting to think about like the creativity aspect of it too. Like, AI is not really good at the prompting. And so, you kind of have to think up the question in order to start down that journey. And so I'm long humans.
Love it. Well, on that note, I think that puts us at time. So yeah, thanks for listening, everyone.